the premium for a whole life policy is going to be anywhere from 10 to 15 times higher than a term life insurance policy.
Let's put everything into practice. What factors should I consider when selecting a life insurance?
So let's say I want to protect my family, my wife, until our mortgage is paid off.
Welcome to today's podcast. Today, I'm honored to have Tony Steuer with us live to discuss how to choose the right insurance and avoid common pitfalls as an individual. So Tony is an insurance expert with over 35 years of experience in the finance and insurance industry. He's an award-winning author in personal finance and served as the board member for various companies and associations, including the advisory board on Forbes Advisor Insurance. So Tony, start with the definition. What is life insurance and what does it mean to you? Why it is important?
Well, life insurance at its core protects against a premature death. So why life insurance is important is that because people are financially dependent upon us, and it's important to be able to protect against that risk for the family is, as I talked about, is to protect your spouse or domestic partner, whatever the term is, whoever you share a household with and have a long-term committed relationship with, if you're sharing expenses and things like that. Life insurance is super important. If you have kids, life insurance is super important. If you have a business, you can use life insurance to protect your partner. And, if you have a small partnership, you can use life insurance. So life insurance is super important if you're dependent upon somebody else's income. Now, if you're supporting, a special needs child, that's coverage you want to make sure you have, because that child may not be able to care for themselves at any point in the future. So that's really why I think life insurance is super important, is because it fills a pretty big hole if something should happen. And that's really what life insurance is. If something should happen, then I get money.
Yeah, something happened, you mean someone dies, right? The main earners, for example, in a family.
Exactly. Sorry. And I was still talking a little bit generally about any type of insurance, is, because that's really insurance. If something happens, then claim is paid.
Yeah, I think a typical example that I see across the board, like especially here in Zurich, in Switzerland, I think a lot of family, for example, a single earner, for example, the husband is the main earner of the family and with his housewife and probably with one or two kids. And then in this case, normally they will have a life insurance, on the main earner, just in case, he dies one day and then the family, the two kids and the wife still have income to support themselves financially. I would see is quite a typical use case here as well. And Tony, you mentioned you had a term life insurance, right? Instead of a whole life insurance. There are different types of life insurance as well. And I heard there's also one called universal life insurance. There are just so many different kinds, types of insurance. So can I ask you, what are the main types of life insurance policy and how do they differ?
Sure. And actually, I want to walk back to one other thing that you said is, so in that typical family scenario that you mentioned, it's also super important to get insurance on a non-working spouse, is
Also, okay.
because the non-working spouse, it brings a lot of value to the household because they take care of running the household. They take care of, childcare. They take care of, a lot of different things. So anybody who's spent time running a household, there's a monetary value that you think about. So if that spouse passes away, like what costs are going to be incurred to take care of that? So I don't want to get too deeply into that because that wasn't your question. So the main types of life insurance are term life insurance, which is coverage that pays a death benefit only. Now, people call it temporary life insurance, which is sort of correct, sort of not. It's called term life insurance because it stays in force for a certain term of years. And this is where people get really confused because they're not thinking about what risk they're protecting against. So that's the most important question when you think about types of life insurance is, So let's say I want to protect, my family, my wife until our mortgage is paid off. So I need term life insurance for, let's say, 30 years because I have a 30-year mortgage. So
Hmm.
why would I need a 50-year permanent life insurance policy if I only have a 30-year need? So that's what I mean by thinking about the risk that I'm trying to protect against. And in this scenario, the need is to pay off the mortgage. My wife doesn't need to create a supplemental retirement plan with a life insurance policy. She needs money to pay off the mortgage. That's her need. So there's no need for cash value. There's no need for anything else. She needs a 30-year term policy. Now, with kids, it's the same thing. You want to protect against your kids are hopefully self-sufficient, whether you think they should be self-sufficient at age 18 or age 25. You're buying term insurance to protect your kids. Now, the other form of life insurance is called permanent life insurance. And this is where all the other types of permanent life insurance, other
Permanent
types of
means
life
whole
insurance.
life. Are they same? The whole life insurance and permanent life insurance, are they the same thing or?
Yeah, so whole life
Okay.
insurance is a form of permanent life insurance. Universal life insurance is a form of permanent life insurance. You may
Mhm.
have variable life insurance, you may have equity index life insurance or similar forms. So any policy that's going to go for a longer period and build up a cash value is referred to as permanent life insurance. Term life insurance policies do not accumulate a cash value, and they're strictly death benefit only. They're strictly risk protection vehicles. So permanent life insurance policies are going to accumulate a cash value, and that's where it gets really complicated in how they do that.
Mhm.
So with a whole life policy, you're going to have a lot of guarantees. The premiums will be guaranteed, the death benefit will be guaranteed, and there will be a guaranteed cash value. And if you have a participating whole life insurance policy, it may also pay a dividend from the insurance company. Dividends are not guaranteed, but with a whole life insurance policy, it's going to be more expensive, but that's what you're paying in return for knowing what your premium is going to be, what your cash value is going to be, and what the death benefit is going to be. And a whole life policy, forget about the name whole life. It doesn't necessarily go for your whole life. It may go to age 90 or it may go to age 120. Now, if it goes to age 120, that's pretty much everybody's whole life. But if it goes
Mhm.
to age 90, a lot of people are living past age 90. So you have to forget about the names and again,
Mhm.
get back and take a look at what the policy actually is and what it actually does. Now, you mentioned universal life.
Yeah.
That's what's called a
Another term.
flexible premium.
Mhm.
Yeah, it's called a flexible premium, flexible death benefit policy. When you look at the policy, it'll say flexible premium. It may say adjustable life. Basically, that means the premium is flexible. It's not fixed. And so you have to monitor those policies um, because there's a cost of insurance component, which is how much the insurance company is charging you for the cost of insurance. I can go super deep on this. I'm trying to keep this pretty high level, but the interest rate is not fixed or guaranteed on the policies. So you have a fluctuating interest rate on the policies. If you get into what's called an equity indexed universal life policy or a variable life policy, that's dependent upon certain investment subaccounts. So you can see where that gets really complex. But then you step back and say, well, gee, do I need insurance for the rest of my life? Do I need insurance to age 90? Do I
Yeah,
need
yeah.
it to age 100? Because the multiple in premiums, so the premium for a whole life policy is going to be anywhere from 10 to 15 times higher
Oh, that's
than a
so
term
much
life insurance
more
policy.
expensive. Yeah. Okay. I think
Exactly. And then you get back to what we talked about earlier, it's like with the high surrender charges and all the different things. If you walk back to what risk you're trying to protect against, then you can walk back and see, well, does this policy meet my goals?
it's so true. Just so many different terms and names. I think I'm so at some point I was so confused as well. Let's put everything into practice. Tony, you mentioned you had a term life insurance. So I wanted to ask you, so what factors should I consider when selecting a life insurance? And you went for term life. Why not whole life? Why not universal life? Can you maybe use yourself as a case study to tell us, what factors should we consider when it comes to life insurance policy selection?
Well, again, I looked at the risks that I was trying to protect against. So
Hmm.
the risks were um, my wife being able to pay off the mortgage and to stay in our house. So,
Hmm.
how much money would she need to make mortgage payments, to pay for the maintenance costs in her house, to pay for the insurance, property taxes, all the different things that are involved with paying for a house. And then, we have a kid. So it's like, how much money does there need to be for the upkeep and maintenance of our child and sending them for higher education. So that was, and that's not a permanent need, because one thing people tend to forget is if you're saving money for retirement or financial independence or whatever you want to call it,
Hmm.
that hopefully by the time you get to be 65 or 70, you're going to have more money in that pot than you will have under the insurance policy, which eclipses the need for life insurance. So let's say we haven't paid off our mortgage yet. Well, my wife's going to have a lot of money in our retirement plans. So we're not going to have a permanent need for life insurance because we've saved enough money elsewhere. And
Hmm.
that gets back to what we were talking about earlier, is also taking a look at this in context of your overall plan, because that's the biggest mistake that I think people make with all their financial services and products, is
Hmm.
looking at them in isolation and saying, well, is this the best, do I want this product or not? Instead of saying, well, this is my plan. I want to be
Hmm.
financially independent at age 60. I want to protect against these risks. What's the best way to meet these goals, and what are the tools? Because that's all financial service and products are at the end of the day, is their tools. And so when you look at life insurance, it's like thinking about, if you're trying to fix a certain thing, you know, do I need a screwdriver or do I need a hammer? Because there's some situations where a screwdriver is going to be great and a hammer is going to be a horrible choice. So, with your life insurance, you take a look at it that way. And that was the decision we made, is, term life insurance, let's say in this case, it's a flathead screwdriver, was the right tool to accomplish the job, but also keeping in context, our greater plan. And then we had other money that we were accumulating, which offset the need or even thought of getting a permanent life insurance, because it's just like, well, why do we need this really expensive product where I can do much better? And this is not, I'm not an investment advisor. I'm not endorsing any investments in getting a low cost exchange traded fund or mutual fund.
Yeah. What I really love about what you just shared, Tony, is like never look at it in isolation. We're really talking about a holistic picture and holistic goal, really goal based. What do you need? And then this insurance policy or mutual funds or ETF or certain stocks or bonds, they are all serve your goals, serve the holistic picture that you have. So just wanted to remind everyone that we actually have playlist called How to Make Money, How to Save Money, How to Invest Money. So I will also put the link on the pinned comment area as well. So Tony, another question regarding life insurance is that people, when I come across life insurance, I know I can pay probably 100K per year as premium. I can also go with 10K. So in terms of premiums and the benefits, like whatever you call it, you actually receive at the end of the day, it can be quite flexible. So my question to you is that how do I determine the right amount of life insurance coverage do I need? Maybe you can also give me some example, like you yourself or some other of your previous clients or family or friends, to explain a little bit about this?
Well, my favorite method
Hmm.
is, well, the one thing that you have to understand about any planning is that plans are going to change. So the minute you make a plan, it's already out of date. So you're trying to hit a moving target by choosing the right amount of life insurance. So the method I like best is thinking about the amount of income that would be needed in the event somebody passed away. In this case, is how much money would my wife need in the event I passed away? And then working backwards. So let's say my wife is going to need $50,000 a year, is
Mm-hmm.
figuring out what amount of principal invested at a conservative interest rate, let's say 4 or 5%, would provide a $50,000 income stream. So let's sticking with a $50,000 income stream and a 5% interest rate that she would invest money at and get, return of 5% on of income every year would be $1 million of coverage. $1 million times 5% equals $50,000 a year. So that's what I urge people to do, is to think about that. $1 million is a great place to start. I'm not recommending everybody needs $1 million of insurance, but it's a super easy calculation to
Mm-hmm.
use, is to say $1 million. Well, $1 million times 4% is going to be 40,000 a year. $1 million a year times 7% is going to be 70,000 a year. So you can just divide from there or multiply from there to find out, the income stream, and that works in every denomination.
Mm-hmm.
It doesn't matter, if you're talking about yen or pounds or euros or whatever, the calculation is still going to hold, because you're talking about how much income you want to replace. And again, that gets back to what we were talking about, is the goals and what risks are you trying to protect. And you make sure you're protecting against that risk. And in this case, we decided, $50,000 a year was enough. We actually have a little more coverage, but I'm just trying to make this, boil it down to an
Yeah,
example that
yeah.
people can use.
Yeah, I like this. I think, a lot of people may see it as a reverse engineer, right? See how much you would need if one pass away, for example, and then you can calculate, okay, what's the right amount that you want to put in as premiums. And Tony, at the very beginning, you also mentioned how minimize premiums and maximize benefits. So one last question that I have for you is that how does health and lifestyle affect your life insurance premiums? And in terms of minimize life insurance premiums, like do you have any tips and tricks regarding this as well? Maybe keep healthy. I know, but I want to know more about it from you.
Yeah, and so I did talk about this a little bit earlier, but the insurance companies have different ways of how they view each specific risk. So that's why it's important to
Hmm.
really be clear on what your risk factors are. And that's working with a quality broker or insurance agent that can go through that with you. I think we all know that if you're using tobacco, that's going to make you higher risk. An insurance company, what they're trying to look at is like, okay, when are you going to pass away? That's their big
Hmm.
question, is like, are you going to live longer, or are you going to live shorter than the average person? And then if so, then, you know, how do they price that risk? So something, for example, is cigar smoking. That can
Hmm.
really vary if you smoke cigars as to whether an insurance company considers you a smoker or if they consider you a non-smoker. If you smoke 2 cigars a year, a lot of
Hmm.
insurance companies will write you at will issue a policy for you at non-smoker rates. So it really depends. You know, some insurance companies will say, "Well, we're not going to write anybody who skydives because obviously skydiving can be pretty risky." But another insurance company may say, well, we're going to offer this to you at a higher premium, but we'll still offer you coverage. So it's really, they'll say, well, we think skydiving is risky, but they'll send you a questionnaire. Well, scuba diving is actually a better example of this, because
Hmm.
for scuba diving, they'll say like, well, do you dive below 100 feet? Do you free dive? Whatever. They'll ask you a bunch of questions to try to assess a risk that you have. And then different insurance companies will say, well, we don't want to write anybody who issue a policy for anybody who dives deeper than 100 feet. That might be their cutoff. Another company may say, have a different cutoff, but it works the same way with health conditions, like we talked about with breast cancer. Some insurance companies will say, well, we're going to write a lot of people who are recovering from breast cancer. So that gives us, more people who are insured, which diversifies our pool. But then we can better classify the risk, and we can provide insurance to more people who are recovering from breast cancer.
Thank you so much, Tony. I think today I really learned a lot from you, and I really hope our audience and also learned a lot from you as well. So before I let you go, I just want to ask, do you have any last words to share with us or tell us probably where can we find you if anyone may have any further questions to ask?
Yeah, so a great place to find me is LinkedIn. That's where I'm the most active.
Okay.
I do have my own YouTube channel, but I don't really check comments, so I can't say I'll comment back. But my website, which I posted in the YouTube comments, you can see the comments below. Is I have a boatload of resources available, so check those out. I answer my emails myself, so you can email me if you have questions. So
Yeah,
that's pretty
thank you
much it.
so
And so,
much. Yeah.
sorry, I was just going to say, stay goal focused first. Always goals
Yeah.
first.
Love this. Thank you so much, Tony. So we'll see each other very soon. Thank you, everyone. Bye bye.